Good morning. We have a little bit of a logistical problem. First of all, let me apologize to you for having to put the hearing over for one day. We're appreciative of your all being here again. But yesterday, Senator Moynihan and myself were asked to join the President in a not too pleasant task, and a very unpleasant task, but a very necessary one, of going up to New York to meet with the families of the victims of the tragic TWA Flight 800. I must say that I think it was very necessary, and I think the President did an excellent job in giving some comfort to the families who are still trying to bring this matter to a closure, because half of the bodies have not been recovered yet. So it was a very emotional, as you can guess, coming together with hundreds and hundreds of the relatives and the President. So that's why we postponed this hearing. Today, we will be hearing testimony regarding we're going to have to break because we are scheduled for a series of votes, for 3 votes, I believe it is, at 9:30. So that means that we just will unfortunately have to break. But maybe I can get my comments in, and Senator Faircloth and any of the other members can. And so when we do resume, we can go right to you, Mr. Boucher. The committee will hear testimony today regarding the structure, management, and operations of the Federal Reserve System and the issue facing the system as it approaches the 21st century. These issues are many. Some are complex. Some are not. Some will require a better management. And some of the recommendations and suggestions that the Comptroller General has made, I believe, are practical. I believe that the Chairman of the Federal Reserve Board, Ms. Greenspan, will indicate that they are beginning to take steps and will be reviewing with a view towards implementing a number of the steps that the General Accounting Office has recommended. Some of the other recommendations are ones that the committee may have a difference of opinion on, and that reasonable people might disagree. But certainly when you have a system that employs over 25,000 people, that has a budget that deals with $28, $29, $30 billion plus annually, it is important that we exercise the kind of responsible oversight that does not threaten the independence and the policy making of the Federal Reserve, but certainly should be striving to see to it that certain standards are met. For example, a number of recommendations that would appear to be consistent with good management practices are having uniformity as it relates to the purchasing of something so simple as health insurance. And I say simple, and it may not really be simple, but various services that instead of having them contracted out by the different banks, that there should be, in a number of these cases, a uniform policy and one contracting agency that could probably save quite a bit of money. You might want to touch on that. Again, sometimes some of these things are more difficult to implement than might be the appearance initially. I'm going to put my full statement in the record as if read in its entirety, and then turn to Senator Faircloth for his comments, and maybe we can even get some testimony before we have to break for the votes. Senator Faircloth?
Thank you, Mr. Chairman. In trying to review and find out what we're doing, it appears there are two issues at hand here. And the first is the spending at the Federal Reserve has been excessive over the last several years. That's certainly a contention. The other is whether the Federal Reserve should keep a sizable reserve that they do not turn over to the U.S. Treasury. As to the spending, the Federal Reserve has suggested that it's kept pace with domestic spending, which has increased 50% since 1998. This may be true, but doesn't necessarily make it right that if other spending's gone up 50%, they have to track it. They maybe should be set an example to go the other way. Well, while we need to be careful at spending in all the agencies, I understand the upheaval in the banking industry has caused some probably spending over and beyond what normally would be spent because of what has gone on in the banking industry. The GAO contends that much of it is due to high salaries, and certainly I was surprised to see that 36 employees make more money than Chairman Greenspan. I can't really figure the rationale for that. Whatever the case, I think the spending at the Federal Reserve should be prudent. It should lead by example and should set an example for the rest of the economy. As to the large surplus the Federal Reserve keeps, some $3.7 billion, I would like to hear the reasoning behind keeping that amount of money in reserve, although the Federal Reserve has said since that money is invested in Treasury securities, it would have no effect on the actual deficit, but would make a paper difference. Mr. Chairman, while some legitimate issues have been raised by this report, essentially some have wanted to use this as a hearing as a means to knock the Federal Reserve. I'm here very clearly to say that Chairman Greenspan has been an excellent chairman of the Federal Reserve, and I don't think he has shown in his policies any propensity to waste any money anywhere. I've seen nothing to indicate that. And in his leadership of the economy, I think the nation owes him a debt of gratitude for what he has done in the controlling growth and stabilizing the economy. So I sure don't pretend to be part of any bashing of Chairman Greenspan or the Federal Reserve. We should perform the full oversight of the Federal Reserve. I think that's our responsibility. But while I think the hearing is justified, I don't think it and will not be part of any effort to suggest that Mr. Chairman Greenspan hasn't done a good job at the Fed, and as I repeat, the nation owes him a debt of gratitude. Thank you, Mr. Chairman.
Thank you. General Bowser, this should probably be the last time that you testify before us. We want to thank you for your cooperation and for your stewardship at the General Accounting Office, and wish you well.
Thank you very much, Mr. Chairman.
We'll turn to you. Let me simply say, this is not a. I've been strongly critical at times of Fed policy some years ago. I've been strongly supportive of the board under the leadership of Alan Greenspan. But I do believe that probably we have an obligation that we have not been that attentive to, because we have been so involved in so many other things with the debacle of the thrift industry and attempting to deal with that problem, the oversight of the RTC. So we have exercised RTC responsibility in a number of areas where we really had crisis it was almost crisis management, you might say, or review of what various regulators were doing to deal with these crises, that the Congress and this committee has not exercised the kind of oversight, because I do believe there are a number of recommendations that you make, and I'm going to ask you to outline those that you think can be implemented, that should not be controversial, and it should be undertaken. The surplus question, you heard my good friend and colleague, Senator Faircloth, raise an issue with, but I think reasonable people on that situation could have an opinion. You rightfully pointed out, $3 billion, a lot of money. Do they need it? Need to carry that cushion? We'll ask the chairman. I am sympathetic, though, that over the years they've carried an approximate balance. It approximates in terms of percentage-wise about the same kind of thing. I like to be prudent. It's earning interest. But there are some very real suggestions that I think we can achieve some management. Let me first say, approximately, what is the annual operating budget of the reserve? Close to $30 billion?
Well, actually, in the operating costs, you're talking about $2 billion to $2.5 billion.
Yeah, but then in terms of all of the income earned,
all the income earned and everything like that, you're talking over $20 billion.
Yeah, well over $20 billion.
Yeah.
Sure. And so I think prudence dictates the kind of oversight, et cetera. General Bausch.
Right. Thank you very much, Mr. Chairman and Senator Faircloth. We're pleased to be here today to discuss our recently issued report on the Federal Reserve System. The findings and conclusion of this report are based upon the most comprehensive review that we have ever undertaken of the Federal Reserve operations. We focused our review on the Federal Reserve's major operational activities and expenses. We did not review its monetary policy making and foreign transactions because of the limitations on the audit authority, which we explained in a footnote here. Now, as you know, Mr. Chairman, Congress established the Federal Reserve in 1913 as our nation's independent central bank. The Federal Reserve is unique among federal entities in its mission, its structure, and especially in its financing. In addition to its well-known role in conducting monetary policy, the Federal Reserve has several other important functions, such as managing our nation's payment system and providing services to financial institutions and government agencies, and supervising and regulating banks and bank holding companies. The system structure is comprised of a 7-member board of governors and its staff, which is a federal agency. Then there's 12 reserve banks, which are federally chartered private corporations, and 25 branches are associated with those 12 Federal Reserve banks. This structure has remained virtually unchanged since it was established, despite the significant shifts in demographics and economic activity that has occurred since then. Unlike federal agencies that are funded by congressional appropriations, the Federal Reserve is a self-financing entity that deducts its expenses from its revenues and transfers the remaining amounts to the United States Treasury. Because an additional dollar Federal Reserve cost is an additional dollar of lost federal revenue, the costs of operating the Federal Reserve System are borne by U.S. taxpayers, just like the costs of any other federal agency. So one important point I'd like to make today, and that is if they can run a more efficient operation and get their costs down, it's like any other federal agency. That helps to reduce the federal deficit. Now, over the 1988 to 1994 period, the Federal Reserve's average annual revenue was $22 billion, which greatly exceeded its average annual expenses and other deductions of $2.5 billion. Each year, the Federal Reserve returned to the Treasury about $16 to $24 billion. The largest source of revenue for the Federal Reserve is the interest earned on the U.S. securities it holds as backing or collateral for over $380 billion in Federal Reserve notes that circulate as our nation's paper currency. The interest income accounted for almost 90% of total Federal Reserve revenue in 1994 and virtually guarantees that the system will earn a substantial profit each year. Fees that the Federal Reserve is required to charge financial institutions providing price services such as check clearing and electronic fund transfers account for most of the system's other revenues. The largest deduction that the Federal Reserve makes each year from its revenues is for the operating expenses of the 12 reserve banks and the Board of Governors. These operating costs totaled $2 billion in 1994 and increased by 48% from 1988 to 1994. This 48% cost increase exceeded the 25% that we had in inflation during that period and the 17% increase in the total discretionary spending that occurred during that period, but was somewhat less than the 51% increase in federal non-defense discretionary spending. In other words, if you take defense out and look at all the rest of the government, they were a little less than that. Now, about 70% of the Federal Reserve's operating costs were for the payment system and other financial services provided to banks and government agencies. About 20% were for regulatory activities such as bank examinations, and about 10% were for monetary policy activities. Pay and benefits for the Federal Reserve's workforce of over 25,000 employees accounted for about 70% of their operating expenses. So most of their operating expenses are really in staff salaries and benefits. Now, as shown in Table 1 here, over 10,000 Federal Reserve employees were involved with providing services to financial institutions and government agencies. Over 5,000 were in support activities, and over 5,000 were in overhead. Thus, over 20,000 Federal Reserve employees, or about 80% of the system's total staff, were involved with support activities, overhead, or financial services. And if you look on the chart that I have on page 5, why, I think you can see just exactly where the staff is. In other words, on page 5, you'll see the first category has 1,600 people. That's only 6% that are working for the Board of Governors. There are 700 people working on monetary and economic policy. That's 3%. Then you've got 7% that work on services to Treasury and other agencies, 32% services to financial institutions. That's the big check clearing system and that. And supervision and regulation is 12%. And then you have two very big categories: support of 20%, that's 5,000 people, and overhead of 20% and 5,000. So if you really add up the bank clearing systems and the service that they give to treasuries and other agencies, plus the overhead, plus the support, you're talking about 80% of the staff. As its staffing composition clearly indicates, the main workload of the Federal Reserve is not policy making. I mean, that's one of the, maybe the most important, but the main workload is really in this production of financial services. And then whether that's paper-driven, such as processing currency and clearing checks for banks, or electronic in nature, such as running an automated clearinghouse and funds transfer system. And it is precisely these major lines of business where we found that the Federal Reserve faces a number of growing pressures and challenges. For example, as a result of increasing competition from the private sector suppliers and a continuing shift to electronic banking, the Federal Reserve has experienced a decline in the volume of its check clearing activity and its market share. As Table 2 shows, the Federal Reserve's costs have been rising faster than corresponding revenues in several of its other major service lines as well. And we found that the system did not meet its cost recovery target for its price services overall in 1994. The major consolidation that is currently occurring in the banking industry could further reduce the demand for Federal Reserve's financial services and significantly affect the magnitude and the distribution of the Federal Reserve supervisory activities as well. In particular, the changes in the number and locations of the bank holding companies in the Federal Reserve examines could require adjustments in the examination staffs of the various reserve charts. I think if you look at the chart that we have on page 7, you'll see that in the period 1990 to 1994, the revenue went down slightly and the expenses went up by nearly 14%. You can see in the other two areas that the revenue was on a positive note, but the expenses were rising faster. Now, in addition to re-examining the allocation of its supervisory resources, the Federal Reserve may also wish to rethink the way it conducts banks' supervision. Rather than simply increasing the number of examiners when its responsibilities increase, the Federal Reserve could look for ways to make more effective use of private sector resources. In our recent review of 5 foreign bank regulatory structures, we found that all but one of these countries used the work of the bank external auditors as an important source of supervisory information. While external audits would not necessarily replace bank examinations, the work of external auditors could be used to supplement and guide the examinations and could enhance the efficient use of the examination. In other words, in Canada and Germany and places like that, they're relying upon the CPA firms to, on the work that they do, and especially in the area of reviewing systems and controls and like risk management on these new financial instruments like derivatives and things like that. And so that is a way of having fewer people on the federal payroll, you might say, and maybe relying more on some of the private work. Now, achieving some consolidation, too, of the 4 federal banking regulators, as we have recommended, could also achieve greater efficiencies in the use of supervisory and regulatory resources. Many of the inefficiencies we found at the Federal Reserve relate to its decentralized nature, which allows each reserve bank to set many of its own policies. This was the point, Mr. Chairman, that you were making. And to the absence of traditional cost-minimizing forces that are commonplace in entities that are either purely private or public sector in nature. We also found that the Federal Reserve retained a $3.7 billion surplus, which we've already talked about here, and I'm going to have Jim explain that further to you as to just what makes up that and what are some of the features there.
Let me ask you, while you're at that point,
yes,
in terms of being able to achieve efficiencies, because I think you have, and this report touches on a number of important areas where we can save maybe substantial sums of money.
Yeah.
You know, maybe not $1 billion here and $1 billion there, but maybe $100 million here and $100 million there. And as Everett McKinley Dirks said before, you know it,
right,
you're talking about a lot of money.
Yeah, right.
And if we're talking about annualized, saving that for the taxpayers is not a bad thing. Problem in terms of health insurance benefits, having a uniform policy and maybe providing a menu for the employees, as many do, so that they'll still have an opportunity to have some choice. Are savings available there? Have you been able to get down to that level of detail to ascertain whether or not savings would be possible?
Yeah, we think there are savings there because when we looked at the different banks, we saw different policies and different programs, and some of them looked like they were more economical than others, and so we think that some standardization there would gain you something.
Would you mention to the committee with any more degree of specificity some of the other areas where you think savings might be achieved?
Well, I think in the travel area, I think in purchasing area are some of the things, some of the benefits, the employee benefit things are different from one reserve bank to the other, and I think some
packages should be more uniform, you're saying?
Well, I think what you should be looking at is what is the best package and the most cost-effective package, let's say, in the overall system, and maybe then the others should be adopting that. That's right.
So have you found, for example, a disparity between a significant one? We're not talking significant disparities in some of these areas and some of the benefit packages?
Yeah, I think we did.
Oh, yes.
Yeah, and we've detailed those in the report.
Would you mind touching on several of those to the members who are here?
Jim, would you? Yeah.
Between the difference of the 12 Federal Reserve banks,
Yeah.
we're saying right much difference between the
Yeah.
benefits and whatever.
Yeah, he's going to give us some of those now.
Okay.
If
If
you
I
can.
could, while he's looking at it, I'm sorry,
Sure.
I'd like to make one very major point, and that is it's really in the other areas, the operations of the check, thing like that, which I think is where the bigger savings are. In other words, I think what you have today is you have two things happening. One, a lot of consolidation in the banking industry, and they're starting to clear more of their own checks. And then secondly, I think they're going to different technology. In other words, they're going to check imaging, as they call it, and they're really making a photograph into the computer system of that check right then and trying to get rid of having to manipulate all this paperwork. See, that's going to have a big effect on the Federal Reserve, where you have 8,000 people here, and where you have a lot of your support people. You've got 5,000 in support, 5,000 overhead. So I think the really big issue here, when you're thinking of 25,000 employees, is what is the future role of the Fed in relationship to this check clearing system, which has been a traditional when we were in a check cashing society, you might say. But as you go more in electronics, and as you get more competition from outfits like the EDS and that, why then the Fed has to really rethink what is their role. And they're basically doing it as they did 20, 30 years ago. They've got some machines that do a little faster.
At that point in time, it was a service that no one else or very few others could provide.
Exactly.
And so what you're saying now is that private sector innovations, technologies, may be making this particular or certain services antiquated, huh?
Yes, that's what I'm saying. And even now you've got the federal government, which is one of the other big units that they serve, going more. They've just announced over at OMB that they want to get out of the paper check business in 5 years, see. So you are having a technological change here that's going to have a big effect on the biggest workload part of the Federal Reserve, and I think that's the area where the biggest potential savings are if the Fed and its leadership can think through how to deal with this in the next few years. And that's the area I wanted to make sure that everybody understood. But Jim, could you make a,
In our report on page 60, we have a full table here of a whole range of benefits, things, the health insurance, the types of savings plans that they offer, the types of leave that they have, the different leave plans. And it talks about how many of the 12 reserve banks have these things and how many don't. And it also compares with the presence of these particular benefits with the other financial regulators like OCC and FDIC. Things like employee stores, subsidized cafeterias, all those types of benefits can vary from bank to bank because it is all up to the individual bank. As Mr. Boucher said, they're a private corporation, so they have a lot of their own discretion and setting their own policies with regards to these matters. And there is quite a bit of variation across the 12 reserve banks in the nature of those benefit packages. And there's particularly some variation compared with the Federal Reserve as a whole and the other federal regulators, and certainly an enormous discrepancy between the availability of these benefits compared with the civil service.
Well, I wouldn't want to put them quite in that category in many respects. I think that would be a mistake. I think we have to understand it. But I do believe that your report certainly underscores the necessity for the committee to be more vigilant and to exercise greater oversight, even if there are just a small percentage, relatively speaking, of the observations that you make in terms of what changes we should be thinking of. And if they are implemented, we're still talking about significant amounts of money that may be involved in implementing changes that I think are necessary. We are down to 5 minutes on this vote, so we of necessity will leave and return, and then I will open it up. If there's any other statements that you want to make, I will open it up to the various members, going to Senator Faircloth and Senator Sarbanes, and then Senator Mack first for questions. All right, so we'll be back in probably, there are 3 votes, I would say, in about 25 minutes to a half hour. Fellow Bowser, Senator Reed, why don't you take a seat over here? And I know you want to testify after Mr. Bowser, but we certainly invite you to join with us. Let me, if I might, for the benefit of my colleagues who have just joined us and we've just concluded our third vote, indicate that I do believe that the General Accounting Office has touched on a number of areas of concern to us. The changing technologies as it relates to cashing checks, whether or not in the years to come this is going to be a significant part of the overall operation of the Fed as it is today, the number of employees involved, the question of whether or not savings can be achieved by more uniformity of standards throughout the reserve system. These are very real questions, and so I'm going to ask now, I'm basically attempting to bring us up to speed, ask if there are any other observations that you or Ms. Heng wish to make.
To make a few observations, and that is that what we think is really necessary here is for the Federal Reserve, the Chairman and the Board of Governors to take a fundamental review of the overall operations, to look at their primary mission, to look at their business lines, and to structure that would best support really the Federal Reserve requirements of the future as far as the operations. I think they might have to bring in some outside experts. In other words, I think that you're in a technology age here that sometimes requires some people from the outside to look at any organization. And I just think in summary, I would just say that I think it's awfully important that the Federal Reserve become as efficient and effective as any part of the federal government. And in no way do we want to threaten the independence of their setting of monetary policy, but we do want to try to help here in achieving just the most effective and efficient Federal Reserve operations that you can. If I could, just for a few minutes, I'd like maybe Jim Bothwell to explain this surplus account a little more, because I know it is an issue that is fairly technical and one that you will have to finally make some judgment on, Mr. Chairman.
Bothwell?
Yes, Mr. Chairman. If I could just go a little bit over the balance sheet of the Federal Reserve to explain this surplus account. If you look at their balance sheet, the Federal Reserve today, its principal asset is a portfolio of U.S. securities of almost $400 billion. Today, they're earning about 6% on that portfolio of securities that's paid by the Treasury Department. So that's an interest income of about $24 billion. Now, in addition to that, they charge for their price services that they provide banks and other institutions, and today they're earning about $780 million in revenues for those price services. So altogether, they have approximately $25 billion in revenues. Now, as we testified, their operating costs are about $2 billion. And so they have returned to the Treasury about $23 billion in essentially excess revenues, excess of the revenues earned minus their operating costs. Now, if you look at their capital, they have about $8 billion in capital at the end of 95. $4 billion of this amount, half of this amount, is paid in capital. That's the stock purchased by their member institutions to become members of the Federal Reserve System. The other $4 billion is the surplus account. It's a capital account that's been built up through retained earnings. Rather than return those earnings to the Treasury Department, they have retained them in a surplus capital account. So the $8 billion in capital, $4 billion is paid in capital, subscriptions, by their member banks, and $4 billion has been financed by retained earnings that have not gone to the Treasury Department. Now, in addition to this capital account, they have the ability to call upon their member institutions for an additional $4 billion of capital contributions if they ever needed additional capital contributions to cover any unexpected losses or expenses. To become a member of the Federal Reserve, you have to buy stock equal to 6% of your own stock in capital surplus. You only have to pay in half that amount. So you only have to pay in 3% of your capital in surplus. The other 3% is on call by the Board of Governors. So in essence, the Federal Reserve has $8 billion in capital, $4 billion financed by paid-in amounts from the member institutions, $4 billion essentially financed by U.S. taxpayers through retained earnings, but they also have additional $4 billion they could call upon their member institutions if they needed to do so.
So that's really why we think that they could do with somewhat less, or maybe even not need that surplus at all. You know,
Well,
that could be returned, but we
I
recognize
understand,
that.
but I think that reasonable people might, as it relates to that aspect,
Yeah.
have concerns, and that's a question. That's a bigger question. We'll take a look at it. Obviously, and I want to say, first of all, I think that you've done an excellent job in laying out areas that should be of tremendous concern, and I hope to us and to the Reserve. I think the technology changes, the numbers of people involved, what will their functions be in the future as a result of that? These are very important issues, and I want to commend our colleagues for asking for this. Senator Reid is here, and Senator Dorgan, for asking for this study. I think they have contributed tremendously. Let me ask Ms. Singh, do you have any observations that you'd like to make at this time before I open it up to the questions?
Just that the Federal Reserve is at a critical juncture in its history. As you mentioned, technology is having a tremendous impact on the financial institutions and markets arena. In this area of check processing, the Federal Reserve, faces the likelihood of experiencing what is known internally as the post office syndrome. In 1994, about 76% of its customer base generated essentially 5% of the revenue. They have the possibility of losing their big customers to private clearinghouses, to service bureaus, and they really do need to plan strategically and plan as a system for some of the changes that are coming ahead.
Let me ask you one question before I turn to our other members for questions. Would it be so terrible if, for example, the kind of thing, check processing, clearing, etc., were to be lost by the Fed because the system can do it more effectively, more efficiently, and put it in everyday language, cheaper, and save money?
No, because they do the net accounts now when the big banks do it themselves now, they make a net entry, they charge for it and everything like that. But what it would mean is you wouldn't have this army of clerks, literally, that would be doing it.
So that what we're talking about then is downsizing and significantly. As indeed, if there comes a certain point in time when they are non-competitive, people will have sufficient. All of the banks will not be left without these services, right? I mean, there will be then developing an array of alternatives, so that we will not find ourselves in a situation where suddenly the national banking system is endangered. Is that correct?
That's right, because you'd keep them in the rulemaking. In other words, you would keep them in the rulemaking and in the final clearance account.
Are you saying that there's a good possibility then that their traditional work in this area over a relatively short period of time may no longer be functional?
Well, I think it's going to decline very fast on them, and therefore you're going to have a very large workforce and large facilities and everything that are going to be very costly. So if you don't have a plan to to either move it out there or to adapt to this new technology, then you're going to have a costly operation. That's really what it's getting
Well,
down to.
again, let me say before I turn to Senator Sarbanes for his questions that, and we're going to try, because Mr. Greenspan is waiting. We have our colleagues, Senator Dorgan, Senator Reid. We can call upon them as soon as we're with you. I want to thank you for, I think, bringing to the attention of this committee. Certainly, I will be. I admit it. I was certainly not aware of the situation, the potential out there, and what will be taking place. And I think it's important for us to find out from the Reserve how they plan to deal with these shifting technological forces, etc.
You have a big client right in your own New York state there, the chemical chase combination, that are going to the most modern technology and that. So I think sometime if you'd have them explain what the future is going to look like, why I think you'd get a good picture of that, Mr. Chairman.
Well, I'm very appreciative.
Yeah.
Senator Sarbanes.
Mr. Chairman, I'll be very brief because I know we have our colleagues here waiting to testify, and then the chairman of the Federal Reserve Board. First of all, I want to commend Senators Dorgan and Reid for asking for this study, and the GAO for producing a very good piece of work. This current and future challenges requiring system-wide attention. And Mr. Chairman, I want to commend you for holding this oversight hearing. I think the committee is performing a valuable service in reviewing the GAO report in a public forum, and having the opportunity publicly to hear from the GAO and also from the Federal Reserve System. Before I ask just a couple of questions, I'd like to say a word about the Comptroller General. Comptroller General Boucher's 15-year term as Comptroller General expires this fall, and this may well be his last appearance before the committee in that capacity. He was appointed, as we know, in 1981 by President Reagan. Prior to that, he was associated with the accounting firm of Arthur Andersen for 25 years, except for a 4-year period in the late 60s when he served as Assistant Secretary of the Navy for Financial Management. And on the occasion of what may be his last appearance, there are just a few comments I'd like to make. First, I want to commend him for serving the full 15-year term. Unfortunately, too often we find people appointed to important positions actually with much shorter terms than that of the Comptroller General, who serve for a relatively short period and then move on to other things. And some feel they use these important positions as stepping stones, unfortunately. I think it's an indication of Comptroller General Boucher's commitment to serving the public interest that he carried on his demanding responsibilities for the full term. Now, longevity is not necessarily the preeminent virtue, so I'd like to go on and also commend the Comptroller General for his outstanding and often courageous leadership of the General Accounting Office. The GAO is the investigative and auditing arm of Congress with a mandate to audit, evaluate, or investigate virtually all federal operations wherever they take place. And it's my strongly held view that the Comptroller General Boucher has carried out his duties with an exceptional degree of integrity and independence. In my perception, to the best of his ability, he has tried to give the Congress and the public the facts and an honest assessment of what could be done, even if it didn't always please everyone. And for that, I think he deserves great credit. Actually, GAO reports overseen by the Comptroller General have touched on virtually every facet of the federal government. For this committee in particular, the GAO has conducted numerous studies that have had major influence on the formulation of policy. We all recall, of course, the extensive work that they did on the savings and loan crisis, which was a matter that occupied a great deal of the time and attention of this committee. Finally, I just want to say I have personally enjoyed my working relationship with the Comptroller General over the years. I think really he has set a very high standard for the conduct of the office, and I want to take this opportunity to wish him well in his future endeavors. I noticed the statute, as I understand it, provides for one 15-year term, and the Comptroller General is now nearing the end of that period, and I, for one, want to thank him for, I think, an extraordinarily high contribution to the public interest.
Thank you very much, Senator.
And having said that, Mr. Chairman, I think I'll forego my questions and save them for the Chairman. It would only be in the course of further developing the GAO report, which I think is a very thorough and comprehensive piece of work, and we thank Mr. Boucher and his colleagues for the quality of this contribution.
Before I turn to further questioning, let me say that two of our colleagues who are responsible for this report, because without their having made this request, it's undoubtedly you've had plenty of work. You wouldn't have undertaken this. So I want to, again, because they're here, commend Senator Reid and Senator Dorgan, because I believe that your work is going to be tremendously helpful and useful and will result in us dealing with some of the problems that we see coming down that you've pointed out in terms of technology and the changes, and then also looking into the area of where we can accomplish savings. I just want to raise this. Have you had an opportunity, I don't think anybody has suggested looking at the XM Bank, because I think there are some recent reports that give us indications that there may be, again, the need of some oversight in this area. Have you had occasion to?
We are currently looking at the XM Bank, Mr. Chairman, and what would be the timing on that work?
I think we're just underway at our preliminary look at the bank.
Then let me say this before I turn to Senator Reid. Maybe your staff could meet with some of our staff to tell us at what point you're at, because I think we might have a number of areas of concern that have been that we have shared already as a committee that we might ask you to take a look at, so that you could even be could help you in the kinds of things that we're looking at and that we're interested in as well.
Be happy to do this.
Senator Reid, Senator Dorgan, we welcome both of you.
Thank you.
You have a
comment about Mr. Boucher. I'm not sure I'm wrong on the state. I just want to second what Senator said.
Certainly.
Just a tremendous job you've done. Just one of these agencies which all of us, regardless of party and ideology, we disagree with you at times. You can make us angry, which is a good indication you're doing your job. And it's just so refreshing that in the midst of all of this, there's still an agency that provides, whether we like it or not, whether we like the conclusions you draw, it's some of the most credible information we have to work on. And it's a great tribute to you and your staff. And you may not be a household name, Mr. Boucher, but you've done a
Thank
great.
God, right?
You've done a. Yeah, that's usually a bad news if you're a household. But you've done a tremendous job. And,
Thank you very much.
we're very, very lucky that you've served your country. Appreciate it immensely. Wish you well.
Senator Reid.
Thank you very much, Mr. Chairman. And let me say, I don't know if there's anyone in the Congress that's worked more closely with General Boucher than I have. I spent a number of years as chairman of the Legislative Branch Appropriations Subcommittee, and during that period of time, there were tremendous changes that were necessitated at the General Accounting Office. And I, too, want to focus on General Boucher as what can be done with any governmental agency. The General Accounting Office was not forced to do the changes, or at least should say all the changes. They initiated many changes themselves, cut back thousands of people from their payroll, and made, now as I understand, about a 25% overall cut. Is that right, General Boucher? And I don't think there's another government agency that has made the sacrifices that General Accounting Office has made and still has the professional expertise to do reports like this. So I too have appreciated the work that you've done for our country, and my personal relationship with you only magnifies the job that I think you've done, so I appreciate the work that you've done. Mr. Chairman, and I say that because if the General Accounting Office can make the sacrifices that they have made and still do the good work that they do, I think that the work that they've done with the Federal Reserve Board deserves even more scrutiny, because I think there can be some changes made at the Federal Reserve Board that will not affect monetary policy, but yet recognizing that about 93% of all the expenditures made by the Federal Reserve is totally separate and apart from monetary policy. And I think the General Accounting Office has only been able to look a little bit at what I would refer to as the perks of the Federal Reserve people that work there. We have been scrutinized, all of us, in the legislative branch of government, and I think the Federal Reserve System deserves even more scrutiny than this report has given them. Senator Dorgan and I requested this report. It took a significant amount of time for the General Accounting Office to do the work they've done for a number of reasons, one of which was the difficulty of getting the materials from the General Accounting Office. This is one of the first studies that was been done, certainly the most in-depth study. There has been testimony here today because of the self-financing nature of the Fed that their operating costs have largely escaped public investigation. And we felt it was high time we opened the door, and we've only opened that door just a tiny crack. There's a lot more that needs to be looked at to examine the workings of this large and extremely influential public entity. The landmark GAO report, which was issued earlier this year, in my opinion, raises serious questions about a number of things, including management of the Fed. One of the most astonishing findings that we came across was this $3.7 billion fund that's been put away in taxpayer money in a fund which it claims is needed to cover system losses. Of course, there's never been a system loss in the 79-year history of the institution. The GAO report indicates that this fund could be safely reduced or eliminated and returned to the Treasury Department, as is standard practice with surplus revenues every place else in government. It makes no sense for this cash to be sitting idle at the Fed instead of being used to reduce the deficit. The House has recognized this, and yesterday there was action taken in one of the appropriation bills to take this money and to use it for other purposes. And I'm not going to debate whether it's the right purpose it was taken, but it was taken, and I think there's going to be other efforts made to take this $3.7 billion and some of these other monies and use for other purposes. While the rest of the federal government has tightened its belt and downsized, the General Accounting Office revealed the Fed has enjoyed a tremendous, enormous growth in its operating costs, and I believe it's questionable growth in staffing. The GAO study found that operating costs at the Fed have grown 50% between '88 and '94, a rate twice that of inflation and much greater than the overall federal discretionary spending. The study also uncovered salary growth at a rate of 44% between 98 and 94, between 1988 and 94. During the same period, personnel benefits skyrocketed 90%. The study also showed non-uniform travel policies and an excessive 66% increase in travel expenses. And the way they handle travel is unique. Just do it however they want to do it. Some are reimbursed for everything they spend, and others have per diems. There should be some uniformity. The picture the GAO paints of the internal management of the Fed is one of conflicting practices, questionable spending, erratic personnel treatment, and favoritism in the procurement and contracting policies. The report makes it clear that the Fed could do much more to increase its own fiscal responsibility. The compelling evidence offered by the GAO report indicates that many of the practices of our nation's central bank should change, especially when their budgetary excesses represents a direct cost to taxpayers. This fund, some referred to as a slush fund, along with increasing bloat, perks, and benefit, begs greater accountability. Senator Dorgan and I are going to introduce legislation to remedy these problems. I'm not going to spend more time, Mr. Chairman, talking about what I think needs to be done, other than to say that I think the example set by the Federal Reserve is not a good one. This is an agency we look to for fiscal responsibility. They are calling upon everybody else to cinch their belts. We had a meeting that I conducted. We asked the chairman, Greenspan, what is the most important thing the federal government needs to do? And he said, cut spending. Well, we've done a pretty good job of cutting spending. They have done a very, very bad job of cutting their own spending. And I think that there certainly need to do a lot more. Senator Dorgan has focused more on monetary policy than have I, and I think as a result of that, we've made a pretty good combination. We appreciate the comments of the chairman and the ranking member in complimenting us for directing this report to be completed.
Thank you very much, Senator. Senator Dorgan.
Mr. Chairman, you've been very generous in allowing Senator Reid and myself to come and spend a couple of minutes. I wasn't able to hear all of the testimony by the GAO, but obviously I reviewed their report. I think it's an interesting report. It's a historic report in many ways. The Fed was created in the 19-teens with the admonition by those who supported it and created it. This would not become a strong central bank accountable to no one, but of course over many, many decades it has become an institution sitting there alone on a hill, fence around it. You can't see much inside. The doors are locked when they make decisions. And it has not been accountable, honestly, and we asked the GAO, take a look, if you will. How does the Fed operate? How does it spend its money? What is it doing down there? And they produced a report that is a professionally done report. I think it's a real contribution. I would join others who have complimented General Bowser and others at the GAO, for whom I have the highest respect. I want to make just a couple of points about this. The minute someone begins talking about the Fed in any way other than glowing terms, you are immediately viewed as some sort of, quote, Fed basher, unquote. It's not my intent, nor the intent of Senator Reid's, to be a Fed basher. It's not my intent that monetary policy should be conducted by the United States Congress, for that matter. It is my belief, however, that the construct of monetary policy in this country have some accountability in some ways to the needs of this country, all the country, not just parts of the country. And it also is my intent that any institution created by the federal government should be accountable in some way for how they spend their money. Mr. Chairman and other members, the Federal Reserve Board has not had a loss for 79 years and is not going to have a loss. This is not an institution that loses money. If this institution ever loses money, you ought to do a lot more than ask the GAO to look into it. This does not lose money, this institution. For 79 years has not had a loss, and at a time between 1988 and 1994, when it was telling the rest of the government to tighten its belt, cut spending, conserve, it was increasing its surplus set aside to anticipate future losses by 79%, up to $3.7 billion. One should ask the question, as the GAO suggests, whether there is a surplus needed at all. If there is a surplus needed, how much of a surplus? But one need not ask the question of whether it is prudent at a time when the Fed is counseling everyone else to tighten their belt, that they squirrel away a 79% increase in their stash of $3.7 billion. That is not prudent. And I think it's important for this committee and the Congress to ask the Federal Reserve Board for an explanation and then to take action. That, after all, is not their money. It's money that belongs to the people of the United States. I personally would sooner see some of that used to reduce the deficit. There are other questions raised that Senator Reid has alluded to, and I will not go into them in great detail, but excessive costs in construction. I thought about bringing a picture today, but I didn't. It's a wonderful color picture of a 28,000 square foot lobby. It was supposed to have only been 7,000 square feet. Somehow it ended up being 28,000 square feet with 4 chairs in it. It's a wonderful picture that describes, I think, probably lack of accountability. The GAO report just simply describes that somehow in the construction area there wasn't proper management or accountability, and the
I don't
GAO...
want to ask the senator
Yes.
where, because I'll probably find out it was in New York.
It was not in New York.
Oh,
It was.
Senator Faircloth wanted to know where, and so
It was
he
in-
thought it was in New York.
As a matter of fact, it was in Dallas, Texas. But
Oh, that's the famous building, yeah.
That's where they believe in wide open space.
It's true.
28,000 square foot lobby.
But not necessarily paid for by the American taxpayer. Yes, I believe it's 27,000 square feet, but I'll be glad to send the picture down before you adjourn today so that you might at least have
We'll put it in the record.
the opportunity to put the picture in the record.
Senator, why don't you send for it? Well, you can hold it up and we'll get it.
We have
in.
that picture. If we
Sure.
can bring that down, appreciate that. Salaries and benefits, contracting problems that the GAO says are not in shape. Those are the kinds of things that I think the Fed should answer to. Again, let me say, too, it's not my intention to come here and skewer the chairman of the Fed or the Fed Board of Governors. While I have substantial disagreements with the Fed on monetary policy, I've said on the floor of the Senate, I admire Mr. Greenspan. I admire the tough work they do. But they, like all other people who are stewards of the taxpayers, have a responsibility here. How are they spending their money? How do we represent to the taxpayers the Fed is spending its money? Now let me divert just one moment as I conclude, because next Thursday we will have a report on the gross domestic product in this country and in the last quarter how much it's grown. And if by chance it produces some semblance of good news, I assume they'll lock the door to the ceiling or to the roof of the Federal Reserve building, and they will have to lock doors to the upper floors in New York, because any semblance of good news on economic growth will produce people with urges to jump, I'm sure. We have an apoplectic seizure in this country at the least bit of economic good news. Now, the fact is, federal funds rates are now a full half percentage point above where they ought to be by historical standards under the stewardship of this Federal Reserve Board. And there is no excuse for it. And we're not talking, however, about reducing them. We're hearing talk about increasing it. The prime rate ought to be 6%, and the federal funds rate ought to be a full 0.5% below where it is now, given the rate of inflation. And we face the threat, I assume, very shortly, if we have any semblance of good economic news, like maybe the economy is working pretty well and moving along, more people have jobs, then we face the threat of people saying, well, we got to put our foot back on the brake and slow this down in a big hurry. And I couldn't disagree more. I'm not an advocate of inflation. We ought to fight inflation and fight it aggressively, but we fought inflation and we have virtually no inflation today. And especially if you believe those who think that the CPI is overstated by 1.5%, there's virtually no inflation. And to talk about continuing to put the brakes on this economy long before most people have the opportunity they need is very ill-advised. And that's a debate that we'll be involved in, I'm sure, in the next week or so on the floor and elsewhere. I came today, however, to, along with Senator Reid, tell you this. I very much want you to, and the chairman has been very generous, and so has Senator Sarbanes, saying that they intend to look at this GAO report in a thoughtful and critical way and constructive way. And secondly, I'd like you to look at a piece of legislation Senator Reid and I are introducing today. It includes 4 parts that relate to the recommendations of this report in most cases. The GAO, let me just run through them in just 30 seconds. 1, the GAO, in consultation with the Federal Reserve Board, will identify and report to Congress a list of the Federal Reserve Board activities that have nothing to do with monetary policy. Nothing. That's 90% of what the Federal Reserve Board spends. And the Congress shall subject that to annual appropriations. Not monetary policy functions, but the non-monetary policy functions. Second, the Federal Reserve Board will return the $3.7 million on the accumulated surplus, and the bill would ask the GAO to give recommendations to determine what kind of any future surplus would be necessary. And third, the regional Federal Reserve banks will be subjected to annual independent audits. Fourth, the Federal Reserve Board would be required to follow the same procurement and contracting rules applying to other federal agencies. That's a thumbnail sketch. I shall not go on for the committee. I appreciate the time and the indulgence, and appreciate the commitment as well of this committee to take a serious, thoughtful look at good work the GAO has done in this area. Mr. Chairman, thank you.
Mr. Chairman, if I could just say one additional thing. We have maintained during this entire period of time that we've been working with the General Accounting Office that we would stick with what they have prepared for us. We have had opportunities with telephone calls and things people have sent to us to sensationalize this hearing even more than the report indicates. We've stayed away from that. We've had communications from people that work at the Fed who've raised all kinds of things. We're not making, we don't know if those are factual. Perhaps if the committee and or the General Accounting Office at some later time wants to look at some of these things, I think they should do that. But we've tried to make this non-sensational and factual.
And Senator, I think that's important that people know the manner in which you and Senator Dorgan have proceeded, that this is not to hype it, nor has the General Accounting Office. I think there are legitimate areas where we would want to be very careful, very mindful of not making it difficult, if not impossible, for the Fed to continue its very vital functions by placing arbitrary rules, even some that we're governed by, and so I appreciate the manner in which both of you have handled this. Secondly, let me say that as it relates to your legislation, I would look forward, the committee, and I have not spoken to Senator Sarbanes, but I'm certain that he would, well, Senator Sarbanes will speak for himself, but we certainly would look forward to working with you, and I would hope that you would be amenable to that process, and that we not get involved in setting bottom lines, but rather all of us keep open and flexible. I have indicated to both of you that would be the manner in which we approach this. And I can tell you, I know Senator Faircloth, who wants to save money wherever and whenever, will be anxious, and his staff, to participate in seeing if we can't take your legislative proposal as a starting point, and then looking to work with you and seeing if we can't deal with some of the problems and some of the concerns that your legislation attempts to address and does address, and some of the concerns that may not be taken into view, and so that we can come out with a piece of legislation that we can all support. So I don't believe that we'll have time this year to have the necessary hearings and to complete it, but I do think, and I promise both of my colleagues, that we have an obligation to look at this thoughtfully, and not just to look at it, but with a view towards seriously getting ready to prepare legislation in a way that can be supported by the administration and by Democrats and Republicans on both sides, because this should not be a partisan issue. This should be about an issue of providing accountability, and because I think we have not had the proper kind of accountability and responsibility from the Congress as it relates to our jobs in reviewing this operation.
Mr. Chairman, I actually did get the picture from my office, which I know you're anticipating eagerly. This is a picture, and you refer to page 66 of the GAO report at some point. This picture shows the lobby of the Dallas Federal Reserve Board building that was built. When it was built, it called for 2 lobby entrances for 7,800 total square feet. When it was finished, it had a 27,369 square foot lobby, and you can see this. There's an enormous lobby with wonderful windows and apparently a great view, and actually I think there are only 2 chairs there, but one can make the case that they are fairly large chairs. But the point is, you can see from this why the GAO would have selected this as an example of a circumstance where maybe somebody wasn't watching the purse strings here. You end up with a 27,000 square foot lobby with 2 chairs.
Did the Fed contract for this building to be constructed for them? Do you know?
He didn't know. Yes, I think the answer is yes. Yes.
They did?
Yeah.
How much did it cost, do you know?
I have it. It's, well, I don't have the cost. I have the square footage. It was a 540,000 square foot building that, when finished, was 55,000 square foot more than when they started.
Yeah, it was about $155 million. It came under budget, but...
That's why they could have the
bigger lobby.
Yeah, yeah.
Charlie?
Yeah.
It's just like I said, wide open spaces.
The Federal Reserve building in Minneapolis just had to be abandoned, redone. It was built so bad. It's vacant now.
Yes, sir. They're constructing a new building in Minneapolis.
They built one so bad. How old is it?
It was built in the 1970s.
And it's,
It was essentially, I think they had a problem with asbestos in the building. They had a problem with the construction of it. There was a lot of glass exterior, as is the one in Dallas. Not exactly the best exterior to have in a climate like Minneapolis. And it was, as I understand it, architecturally not built with a solid foundation. It was actually built to hang. So there's architectural, structural problems as well.
did they do anything right about it?
Well, sir.
Well, I think they finally decided they had to leave it, and yeah.
Well, that is the
One thing that they about the new building, I mean, part of the reason the Dallas Bank was overbuilt, because it was built on specifications on staffing projections for the future that turned out to be very high overestimates of their staffing. And that's one of the themes in our report. I mean, we don't believe the system can continue to assume this continued growth in its operations that way. But as I understand it, the new buildings that are being constructed, the one in Minneapolis, and I think another one's going to go up in Atlanta pretty soon, their staffing projection a little more conservative and modest.
Mr. Chairman, if I could just make the point, you know, this is obviously not amusing to anyone. It's a serious issue, and I pointed it out. There's so much more here. I pointed out this happens to be on page 66 of the report, but the entire report represents an area of constructive evaluation, which this committee, I'm pleased to say now, is going to take a hard look at. And I really thank you for your generosity in allowing Senator Reid and myself to come and spend some time this morning.
No, well, we thank you, and we look forward to working with our colleagues in a bipartisan, constructive manner, and I thank you. Senator Sarbanes?
I think we should go on.
Senator Fairclough, do you have any further questions?
I have one quick question, and Mr. Bowser maybe will answer it in one word. Is the reserve too large? The Federal Reserve, should they transfer the entire surplus to the Treasurer, or what part of it?
Well, I think you should consider transferring a good portion, if not all of that surplus to the
How much
Treasury.
should they keep?
Well, I think I'd like them to come up with their analysis and present it to the committee, and and maybe we could review it for you at that time after they've done that. Yeah.
Thank you, Mr. Bowser.
Thank you.
I again compliment you on your 15 soon-to-be years of service.
Thank you very much.
Mr. Bowser, we thank you. We also join the years fly by. I guess we came down here at about the same time.
Right, Senator.
And we thank you for your stewardship and for your good work, Ms. Singh. We thank you for your analysis, very incisive, Mr. Bothwell. And we look forward to working with you, because I think it's only a part of yours is to make some observations and call to our attention things that you think can be dealt with. And then there's another part, if we want to avail ourselves, and we thank you, and the Senator raised the question, we will come to you and ask your considered opinion on a number of the things that we review with this legislation as we go forward. Yeah?
Thank you
Thanks
very
much,
Mr. Chairman. Thank you.
Chairman Greenspan? Mr. Chairman, first of all, let me say that no one Yeah, could we put that, the sign, Mr. Greenspan's in front of him?
The sign in front of the chairman, so it's not
Huh?
in front of the empty chair. I think that would be better.
Might not know who he is.
Well, they might wonder about it being in front of an empty chair. We don't want to do that.
Mr. Chairman, while I think there are a number of very real concerns that the General Accounting Office has cited, I think in fairness to you and to the Federal Reserve, you have indicated quite some time ago that you recognize that there were areas in which the Reserve should review, should look to, and this is something that has taken place over a number of years, even preceding your stewardship at the Federal Reserve. A number of the, I think, very interesting areas really are rather recent in development, and that is, what will the question of technology play? What role will that play in the transformation or the continued operation of the Reserve as it relates to some of the basic services? And I'm sure that you listened and your people have read and reviewed some of the comments of the General Accounting Office and some of the comments of my colleagues. I think there is an overall question, a serious question, and that before we become precipitous, there are members of Congress, for example, who have offered legislative action, and indeed the House, apparently in an appropriations bill, voted to use $3 billion for whatever the purpose might be from that fund. So I think one of the areas that we'll be asking you to comment on is the appropriateness of a surplus. How have you arrived at it, at what it should be? Is it more than sufficient, etc.? What, if any, should that surplus be? So I just mention this to you. And again, I don't think it is appropriate to get into these situations that may have developed, and I was very conscious of Senator Reid's comments that this was not basically a witch hunt as such, that there have been people calling in things and they have not engaged in publicly or even privately trying to bring this to the attention of the public, but rather we need a serious review and determine where and how we best play our role and the Fed continue its important role. And so with that, Mr. Chairman, we are pleased that you're here once again. You've been very, very cooperative. You always have. And we look forward to your comments and your observations.
Well, thank you very much, Mr. Chairman. Before I start, I would like to myself be associated with a number of the remarks that were made with respect to the 15-year career of my old friend Chuck Bauscher. I too think he's done an admirable job, and I know I, for one, will miss him, and I'm sure the nation will as well. I appreciate this opportunity to appear before the Banking Committee today to address certain recent reports on the Federal Reserve's operations. Of most relevance, the GAO has raised some significant issues with respect to the management of the Federal Reserve System. Both the GAO and the Congress deserve our full response. We are strongly committed to ensuring that the Federal Reserve System is managed efficiently and effectively. It is most important to us at the Federal Reserve Board and the Reserve Banks not only to run a tight ship, but to foster the attitudes and processes that will ensure continuous improvement in the effectiveness of the Federal Reserve's operations. We recognize that spending non-appropriated funds places a special obligation on us to be particularly diligent in the use and application of those funds. Accordingly, even though we may ultimately disagree with some of the specific suggestions of the GAO, We welcome all of them and their insights because they require us to rethink our positions and change them if appropriate. Certain GAO recommendations for review of specific aspects of our management clearly have merit, and reviews of a number of issues highlighted in the GAO's reports are currently underway. These reviews may lead to changes in the Federal Reserve's administration that will further enhance our effectiveness. It is most important for any organization, including the Federal Reserve, periodically to reassess its businesses and how they are carried out. Strategic planning is particularly critical given our rapidly changing environment in which technology is advancing at an extraordinary pace, and the financial services industry is becoming ever more complex. It is essential that the Federal Reserve adapt to this changing environment with some foresight and as effectively as possible. To that end, in 1995, we formalized our strategic focus by establishing a system strategic planning coordinating group to assess how the Federal Reserve can most effectively meet its public policy objectives into the next century. Our strategic focus is also reflected in recent significant changes that the Federal Reserve has made in the way it carries out its major responsibilities, including several specific initiatives related to recommendations made by the GAO that the Federal Reserve already had underway. For example, we recently engaged an independent accounting firm to audit and certify the combined financial statements of the Reserve banks. The firm issued an unqualified opinion on the 1995 financial statements as prepared in accordance with the Financial Accounting Manual for the Reserve banks. In addition, we are actively reviewing the appropriate infrastructure for providing certain financial services, taking into consideration both cost efficiency and service quality. One difficult issue that has and will confront the Federal Reserve Board in our oversight of the system is the appropriate degree of consolidation of various activities. Certain system-wide activities do appear to be more effective if consolidated. For example, we anticipate that the consolidation of our critical electronic payment applications will reduce our costs of providing these services. But it is also evident that the element of autonomy that is accorded to the Reserve banks has created an environment within the Federal Reserve that attracts highly qualified staff who contribute importantly to the effectiveness and efficiency of the Federal Reserve System over the long run. The advantages of this environment must be balanced against the possible savings from consolidation. Many of our resources are devoted to providing priced payment services. The Federal Reserve has played an integral role in the nation's payment system since the system's inception. Indeed, one of the Congress's original goals in establishing the Federal Reserve System was to improve the efficiency of check clearing. The Monetary Control Act of 1980 fundamentally changed the manner in which the Federal Reserve provided payment services by opening up these services to all depository institutions and by requiring the Federal Reserve Act to set prices to recover its full costs of providing these services, including costs that would have been borne by a private firm. I believe that the increased competition resulting from the MCA requirements has benefited the payment system. The GAO has recommended that we review our future role in providing payment services. We are in the process of conducting such a review in the context of our overall strategic plan. In general, we view our role as a payment service provider as crucial in carrying out our overall central bank mission. We believe it is important for the Federal Reserve to foster the integrity, efficiency, and accessibility of the U.S. dollar payment system, which in turn is important to maintain financial stability and maximize sustainable economic growth. The provision of services by the Federal Reserve has contributed directly to these goals. We regard the wholesale payment services we provide, such as Fedwire and net settlement, as essential central bank services and important in limiting payment system risk. Our role in providing these services probably will not change significantly as the marketplace evolves, although the nature of the services themselves might. It is quite possible, if not likely, that as changes occur in the financial services marketplace over time, or owing to other considerations, our role in providing other services, such as check collection, may change as well. In this regard, we must be sensitive to the fact that as the nation's central bank, we have an unsurpassable credit rating that must not be used to unfairly compete with private sector providers. We are continually assessing our available means of achieving our payment system goals, including our regulatory authority and our role as a direct participant in the payment system, with our public service role always kept paramount. To the extent that we can achieve our payment system goals most effectively through our direct participation, our continued provision of these services will remain appropriate. In considering the cost structure of the Federal Reserve, it is necessary to keep in mind the unique combination of responsibilities that have been assigned to this institution. Different factors affect the cost structure of each of our functions. For example, priced services are subject to the inherent discipline of the marketplace, as the Federal Reserve must control costs in order to meet the statutory directives for cost recovery in the Monetary Control Act. On the other hand, in providing depository and fiscal services to the Treasury, the Federal Reserve must respond to the instructions of the Treasury. We endeavor to carry out Treasury's directives in a cost-effective manner, but cannot refuse legitimate requests because of their effect on our costs or because they are inconsistent with other Federal Reserve plans. In the areas of monetary policy and financial institution supervision, there are fewer external constraints on our expenses. Here we must be particularly vigilant. Given the critical nature of the Federal Reserve's responsibilities, particularly in the areas of monetary policy, financial stability, and financial institution supervision, our major initiatives must be judged not only in terms of cost, but also in the context of risk management and the appropriate level of resources to be devoted to each function. For example, Congress, in enacting the Foreign Bank Supervision Enhancement Act in 1991, clearly concluded that the additional costs of expanding the Federal Reserve's supervisory responsibilities for U.S. operations of foreign banks were justified by the greater financial stability and protection that the enhanced supervision would bring. We focus our banking examination resources based on risk assessments with the expectation that areas not covered extensively in the examinations will not become serious problems. Had we devoted more resources to DIWA and perhaps less elsewhere, would we have uncovered its wrongdoing at an early stage? We cannot know for sure, but the odds would have been higher. But if we had the foresight to divert these resources from other activities, would we have increased our risk exposure elsewhere? As another example, the Federal Reserve's recent investment in a major upgrade of our computer systems and personnel to adapt our surveillance and payments technologies to the major changes that have occurred in private financial markets was also driven in large part to improve risk management. While the costs of these improvements were not trivial, they have enhanced our ability to ensure the smooth functioning of the financial markets, even during periods of financial or operational disruptions. To hold the risk of systemic crisis to acceptably low levels in both the United States markets and U.S. dollar markets abroad requires some redundancy of resources. Given the vast scale of the value of payment transactions that flow through our systems, our Fedwire volume alone, incidentally, averages almost $1.5 trillion a day. We believe that the benefits of this redundancy far exceed the associated incremental costs. The risk management decisions that we make concerning the way we provide payment services